Okay, I wanted to create a secondary video so our high probability options trading strategy video didn't take so much time. So these are how I look at these trades, and these are things that you definitely need to take into consideration. So what I did was whenever I build a trade plan, I look at possibilities, and I weigh those possibilities to the types of probabilities, right? So we're doing high probability options trades, which generally means that we probably will not see a losing scenario, but there is a possibility. So whenever I go into any kind of trade, whether it's this type of trade or any other kind of trade, I look at my worst case scenarios first. So I kind of broke those down for you. So scenario one is the absolute worst case scenario. We're exercised to buy the shares at 610 because we sold a 610 put. And this is what I'm basing this off of, by the way. I'm basing it off of this 19 Feb 610 put. Okay. So our worst case possible scenario is we're exercised to buy the shares at 610, and the day after, because the way options work, when you are exercised, your account settles 24 hours later. So if you were exercised today, for example, to buy the shares, you generally will not see those shares in your account to be able to sell them until tomorrow. Okay. So this is a worst case scenario. We're exercised to buy the shares at 610. Tesla goes out of business the next day. Highly unlikely. Possible, highly unlikely. I don't focus too much on that. So what's the fix, though, for that worst case scenario? Well, we just lost 61,000 or 60 grand, right? So we need to get another full-time job or do something to recover from the loss of $60,000. That's basically our worst case scenario. So remember, every time, if you sold 2 of these contracts, that would be 120. If you sold 3 of these contracts, that would be 180. And you can see how it exponentially gets worse. Okay, but then let's look at scenario 2. So this is a losing case scenario again. And this is probably more on the higher probability to happening. So if this happens, this is more into the probabilities of what would happen. Okay, so Tesla drops 25% because at its current price today, $800 and some odd dollars and change, to get to our price level of 610 would be a 25% drop, which I can tell you, if you do the back testing, Tesla does this. In a day, not typically, but it can happen, right? So we have to plan for it. So this is the worst case scenario. It drops 25%, we're exercised. The very next day, however, Tesla drops an additional 10% because we typically see this. If we see massive drops in one day, the next day isn't all roses. People don't wake up the next day after their hangover and say, I feel great, let's go run a 5K. It's not how it works. The next day, it typically drops some more. Sometimes not as much as the 25%, sometimes worse. But let's look at, this is more likely to happen if we saw a drop of 25%, meaning we're in the money and we're exercised. The next day, it drops an additional 10%. Because we didn't have the money to cover it, or even if we did have the money to cover it, the goal is to unwind the position. So the next day, Tesla unfortunately drops another 10% when we're trying to exercise a sell order to get rid of those shares. And this is what it looks like. We basically bought the stock for $61K minus our initial credit. And then because we were sold out by the broker, I said sold out because many of the people that do these, they don't have the $61,000 to cover this. And if you don't have it and you get a margin call, the first thing the broker does is he sells your shares. He takes your assets and he sells them. And not just on Tesla. If you own any other shares, he's selling those too to recoup the $61K you owe him. So basically, this is kind of, I would look at a more probable worst case scenario. And this is kind of how it looks. And so what was our loss? $6,100. Now there's good news and bad news here. The good news is we didn't lose any of our own money, right? Because remember, we've already made about $6,000 trading this strategy. The bad news is, though, our 2 months of work has been wiped out. So imagine going to work for 2 months, doing all that hard work for your employer, and then he says, sorry, I don't have any money to pay you. That's basically what happens here. Okay, now let's look at scenario number 4. So this is losing case, worst case scenario, medium probability. So I kind of look at this. I look at scenario 3 as more probable to happen as the worst case. I look at scenario 4, though, as, hey, if this happens, it's really bad. Okay. And the probability isn't there, but it can happen, and I need to prepare for it. All right. So everything happens above. Tesla drops 25%. We're assigned 610. So we had to buy the shares at 610, 61K minus our credit. I think our initial credit was like $500. So you're around $60,000, right? And then the next day, after everything settles out, you want to sell your shares, but unfortunately Tesla drops another 25% by the time you sell your shares. How does this look? Well, we bought the stock for 61K minus our initial credit, and then we were sold out by our broker because of margin call, or we did it, and we sold out at 457 or $45,700, which is a $15,300 loss. Now, I call this medium probability, but this is typically what I see from people that don't have a plan. This is high probability when this happens. This is probably still low probability that happens to them because they still don't sell. Or if they had the cash, or maybe the broker hasn't sold off their assets yet, and they say it can come back. It can come back. And they sip from what we like to call the hope cocktail. But this is really what we have to plan for. These are the scenarios. Now, many people will look at this and say, how come you don't have scenarios for profits? I do, but I don't focus on those. I focus on these. This is what puts me out of business. Profits don't put me out of business. Lack of profits don't even put me out of business. Losses put me out of business. Losses put every business out of business. So that's how you have to look at it. So that's basically it in a nutshell. This is what our high probability options trading strategy looks like if the worst case scenarios happen. We hope scenario one will never happen, and the probability is very low that it will ever happen because Tesla is a fairly strong company. GameStop, not so sure. This is probably the scenario. If I were betting on GameStop and doing that, this is the scenario I'd look at. But scenario 2 and 3 are the ones that I'm going to focus heavily on. And this is what I'm going to create my plan on. I'm never going to have a plan that says, all right, if I get assigned, I'm just going to hold the shares until they come back. I never develop that kind of plan. I don't develop that kind of plan because I've read a book by William J. O'Neill, and I highly suggest you read this book if you're thinking about investing in stocks, and I'll leave a link below. But the minute he invests in a stock, the minute that stock loses 7 to 9%, he gets out. Some people look at that as crazy. William J. O'Neill is a multimillionaire and makes a ton of money in that. I don't know if he's still trading, but he's an extremely successful trader. So would I ever question a guy like that? No, I think I'll take his advice to heart, and start implementing it. So whenever I develop my exit strategies or my fixes to, worst case scenarios or losing cases, I'm always getting out of the shares. It brings up a different point that I won't go into, but this is just that. I just wanted to show you this short video. Now, I will show you another video, or I'm going to leave a link either here. I don't know how to do it on YouTube, so it'll probably be in the bottom description. I'll leave a link to, if you are interested in investing in stocks, I want you to watch this 2-part video by my mentor, Travis, who gives you good reasons to do your research and what type of stocks you should invest in. And I will tell you, I'll give you a little teaser hint here. Tesla is not on his list of stocks that he invests in. So go watch that video and you'll understand why. So that's it. You guys take care. See you in the next video.